Hi guys, how are you? Let people get a little minute to kind of log in. Hi, how are you? So yes, we're getting more and more people signing on. I just kind of wanted to go ahead and do this live because as you all know or may not know, I am in the real estate business. I'm a real estate agent and I have been doing this for quite some time. And I just like to help people prepare for the home buying process. It's kind of like a scary subject to some people, especially when they're buying for the first time. I want to touch a couple of points that are very important and that everyone should know when they are in the market or are planning to go ahead and purchase a property. So let's just give everybody a couple more minutes and see who else would like to join us. And if you guys feel free to ask me any questions, if you guys want or are needing any information, or if I'm going too fast for you, just go ahead and let me know. And then feel free to invite your friends as well. I also wanted to ask everyone to join my business page, which is Yadi Sells Miami. That's my real estate page. I will also be announcing it at the end of this live, and we'll go from there. So if you guys, feel free to send over anything that you guys want. I can't believe that I am actually on time for this. I'm a little nervous. It's my first time, so bear with me. Let's see. Hi everybody. Hi. Thank you for joining, guys. This means a lot to me, and it's actually something that I've been wanting to do for a while because I like to keep people informed with the information that I know. And it's free information, so take it, guys, take it. All right, so I'm gonna go. Hi cousin, how are you? So yeah, I'm gonna go ahead and if you guys have anything that you want to ask me, feel free. And yes, I will be giving you guys knowledge. All of this is very helpful. It's helped a lot of my clients throughout the years, and I feel like I get a lot of questions from a lot of my friends, as well as their friends and family, when it comes down to them being able to purchase something or in the market to wanting to buy themselves their first home, or whether it be the second home. Things always change, but for the most part, I kind of have some information that I think is very useful for you guys. And, you can feel free to discuss this with any agent that you're working with, or, anything like that. So kind of like I wanted to give you guys a little cap of what's going to go on this live. I'm going to be doing this live for people who, are either getting ready to buy or are buying, in the buying process. So, first and foremost, very important, guys. I know it gets a little scary sometimes, but you must get pre-approved. The pre-approval is super important. It's a little scary because you have to give in all your information, you have to turn in your taxes, your income, everything. But without a pre-approval, you're basically out there blind because you won't know what you qualify for. And certain properties out there do not reach the criteria demands of banks in order to be able to, qualify your loan. For example, properties that are distressed. If, a property has a very bad roof, you might not even be able to get an FHA loan. It all depends. So right off the bat, your pre-approval is very important. You should get that done right away as soon as you start looking, just because you want to be on the right page and the right path when you start. So then, more or less, another question that I always get: how much money do I need for closing? This number is usually either 2 or 3% of the purchase price. Usually we don't really like to give a number because this changes, okay? So it all depends on the property because of taxes and insurance and all that. So you can kind of calculate that you're gonna need this amount 2 to 3% of the purchase price and save that aside for your closing costs. And of course, this is an estimate. This is not like an accurate 100% number, but it is very close. So guys, that 2 to 3%, guys gotta get that. Once you do get pre-approved and you're under contract, do not go out and buy anything in credit. Do not go get any new credit cards. Do not go buy furniture for your new house. Please wait until your closing day. You do not want to do this, okay? If you do decide to go and grab yourself some new furniture for your new house or get a new credit card or anything like that, please do it after your closing. These things, they're gonna be monitored very closely by the bank that is approving your loan, and if they see these drastic changes, they will deny your loan, and you will have spent already money on your inspection, money on your appraisal. So it's very important that you don't do that. Miss Rachel, hey. So you want to know information on the market right now for vacation properties. Vacation properties, yes, they're doing very well because a lot of people are wanting to move to Miami, and they're actually moving into Miami. And vacation properties are doing very well because these are the types of properties that are going to go to these people that are actually in the market to kind of maybe buy in a couple months, or maybe they're just here for vacation, trying to get away from home, all that. Yeah, and they're making very good profit. So I'll get more into the vacation homes and short-term rentals in another live. But yeah, definitely that's a point that I do want to discuss with you guys, because I feel like it's very important, and it's also making people a lot of money. So yes, I definitely will have another live just on short-term rentals because it's very beneficial to some people. Also, then getting back to my my loans, there's 3 types of loans. Well, actually no, there is the FHA loan that you can get approved for, which the minimum credit score for an FHA loan has been lowered again to 580. It had gone up for quite some time, and then recently it's been lowered to 580. So you know, the minimum credit score for an FHA loan is 580. The thing is, with an FHA loan, you have to kind of go with what you qualify for. But with an FHA loan, you have to pay an upfront premium of 1.75, and this has to be paid upfront, and then you have to have mortgage insurance for the life of the loan. This is done because of the requirements of the FHA loan. Since they're so low, it protects the lender from if the borrower defaults. So a conventional loan usually is a little bit better, and does not require this mortgage insurance. There's also the VA loan. The VA loan is very important because it's available to veterans that have been in the armed forces. And what it does, it's a 100% loan, and you do not have to give a down payment. You do, however, have to pay closing costs, but you do not have to give a down payment. They will 100% finance your loan. It's an incentive that's given to veterans, and it's something very good that they do, and you can, you know, definitely take advantage of this. Also, I've been getting some information on different programs for healthcare workers and physicians, whether they be on a residency or not, and dentists. They are offering up to $7,200 to these healthcare workers, and it is a great incentive as well. We can get more information on that. I'll give you guys my email, and if you guys want to ask me anything, you know, just feel free to do so on an email if you don't want to ask it here on this live. So there's also a jumbo loan. So the jumbo loan is basically a loan that's over $548,250. These loans are considered jumbo loans, and then this amount kind of differs in the different counties. So, you know, it's very important to kind of know the difference between the loans whenever you go to apply for one. And also, this should not lower your credit score. It should be a soft pull. So you can just make sure with whoever's doing your pre-approval that, you know, you can kind of like confirm with them. But yeah, it should not be a hard pull. This should be a soft pull. It will be a hard pull once you are under contract and the bank, you know, finally just goes through with your loan and starts the process, then yes. But in the beginning for a pre-approval, no, it should not be a hard pull. So I kind of didn't really want to get into too much with rates because this fluctuates a lot. And, you know, but I can kind of safely say to you guys that the rates are low. And they're right now, I think, at a 2.875 to like a 3.875. So kind of like the 3.5 is kind of like the most popular rate that I've kind of seen out there. But, you know, everyone's rate differs. And then there are 4 factors that base your rate. These 4 factors is composed of your credit score. The higher the credit score, the better rate you get. Your type of property. So whether it's a primary home, secondary home, or an investment property, this you know, comes into play with your rate. And then also how much you're financing. So the more down payment you get, the better rate you get. And then another thing that the banks are going to look at is your employment. You have to have at least, if you're self-employed, you have to have at least 2 years in the same job. They don't want to see people kind of going into different things and, you know, have a job in, let's say, you know, you own a business in a dry cleaner and, you know, you have this business for 1 year and then the next year you're doing something else. They don't like to see that. They like to see consistency and they like to see at least 2 years in the same job. So it's very important. And then guys, feel free to ask me anything if you guys have any questions or you guys want like any info that maybe I can kind of like prepare you for. But for the most part, I think I've touched very important points with this. And you know, if you follow these guidelines, you will have a smooth process looking for a home. And then, you know, just always make sure that you keep your agent informed, you know, with anything, also with deadlines. The faster you turn in paperwork when it's requested from you, the faster you get them their signatures and things like that. All these things, they prolong your closing and your loan approval. You need to remember that just because you have a pre-approval, it doesn't mean that you are already approved for that loan for that property. Also, something very important, when you do purchase a property, you are advised, you don't have to do it, but you know, in order to get a good insurance rate and in order for you to know the 100%, you know, the 100% conditions of the house, you should get an inspection. This inspection is done by a qualified licensed professional. And what they do is they inspect the house inside out and they will give you a report of the conditions of the house. Also, in the report, you will have an estimate of what they consider it would cost to replace or fix whatever they find in the report. They also provide pictures for you. It's very helpful, this report. You're going to use it when you're going to go and get your insurance. You do not have to go with the insurance that the bank suggests or that your mortgage broker does. You can shop around. You can definitely shop around for this. And then, you know, it's important that you know this because you don't have to. The only time would be if the bank finds out that, you know, you did not pay your insurance and it gets canceled. They will go in there and put their own insurance, and almost 98% of the time it's a very expensive insurance and you can avoid that. You just always have to stay on top of your homeowner's insurance because it can get very pricey. If they do end up putting in their own insurance, assigning an insurance company to you, then your mortgage goes up significantly, and sometimes it's a very hard hit for a lot of people. So you have to kind of like stay on top of that and make sure that doesn't happen to you. Another thing is insurance companies are going to give you credits with the conditions of your house. So for example, if you have a property that, you know, the roof is almost at its life expectancy, they will not give you a credit for that, so that you will not get a discount. If you do have a newer roof, that qualifies for a credit. If you have shutters in your house, that qualifies for a credit. If you have impact windows, that's amazing, that qualifies for a credit. All these things are very important to insurance companies, and they will give you an insurance credit, and it's very helpful to you when it comes time for you to get your insurance. So basically, I kind of like to explain this in the best possible way that I can, but for the most part, that's kind of, you know, where it's at. Because a lot of people sometimes when they put in a contract, they'll ask me, well, why do I have to pay for an inspection? The inspection is for your benefit. The inspection is only for your benefit. You want to know the exact conditions that a house is in, and if you're not experienced and you're not a contractor or, you know, a builder, then you don't really know what to look for. These people are licensed professionals that do know what to look for, and, you know, they will find it and they will put it in your report for you to see. It's, you know, written in a report. And hey guys, sorry, I got cut off. So yeah, basically, what I was saying is that, the inspection report is very important. It's all for you, and you always want to do it. I recommend it unless you're a builder or a developer or something and you know what you're looking for. You can get away with not doing it, or an investment property, but it's recommended that you do. And this comes out of pocket for the buyer. This is something that the buyer pays. It comes out of pocket. Sometimes, you know, you might run into, you know, a credit or something like that for it. I've done it for my clients before, where I will pay for their inspection, and, you know, out of, you know, for working with me, and or if we've been, it all depends, you know, like I do things for my clients as well. So with helping them with incentives, and also I try to get them the best deal possible. If they need a credit or if they need something from the seller, you know, we can talk about these things and kind of disclose that. But I'm gonna take a little sip of my tea here. Getting a little thirsty here. So yes, I'm gonna go ahead and see if I have any questions here. So you would like to get a list of all those possible credits? For sure, yes. You can go ahead and send me an email. I'll provide you with my email, and then you know, any questions that you have, you can send it to me, and I'll send that over to you. Let's see what else I got here, guys. I'm just going through the questions to kind of see. Guys, the market is really hot right now. There's a lot of buyers. We're kind of low in inventory. Another thing that kind of has happened in the years that I have been doing real estate is when an appraisal comes in a little low, the owners don't want to budge, and then the buyer is either forced to cancel or pay the rest out of pocket. This is something that you can do, and it's not really, you know, if a bank is already telling you that they're going to give you this amount of money and this is the value for the property, then that's what it is. Because the bank is never going to give you more than what they think it's worth. And nobody sends the appraiser over. The seller doesn't send it. The buyer doesn't send it. It's the bank. It's coming from the bank. Unless you're doing a cash offer and you want to hire an appraiser to come out, then you do that. But when you're doing financing, it comes from the bank. The bank is the one that orders the appraisal. The appraisal will tell you the value of the house, and then that's what they're going to give you for the loan. First-time buyers, yes, first-time buyers, you know, you guys, there's credits out there that can help you. There's credits for the area where you want to live. For example, if I'm not mistaken, I think it's somewhere in Broward. There's different cities that will offer a credit to buyers. And then they have their certain criteria also. For example, Miami-Dade, at one point, they had a really good credit for first-time buyers. and they were offering up to a maximum of 7,200. So then kind of like that's where we're at with that. And then you know, guys, thank you very much for joining my live. I'm gonna have this live you know, up for you guys to be able to go back to, and kind of like maybe if you want to go over it again and maybe something that you kind of missed, and then you can do that. Also, I wanted to let you guys know I'm gonna probably be doing more videos, more informational videos for you guys. I do get a lot of phone calls and meetings, and you know, sometimes when I'm just hanging out with my friends, they'll just start asking me, you know, questions on the home buying process. And you know, for me, I love it. I love doing real estate, and I love to give people information, especially that information that I know, just to kind of like get them in the right path. I do like to cater to my clients. So, you know, anything that I can do to help out or get them in the right direction, even if you're not planning to buy now, if you want to buy maybe next year or something like that, at least you know how to get into the right direction. You know, you should try to keep your debts at a 20%, and you should, you know, try to avoid paying any credit card or any debt or any monthly payment late. You should try to at least pay the minimum, but always pay it on time. Another good thing is if you pay a little extra, for example, on your mortgage, you can knock off years of your, I mean, you can knock off of the primary that you owe. So it's like your principal, you're knocking off the principal by sending a little bit more. You can send maybe $50 more, maybe $100 more, maybe $200 more. And you don't always have to do this, but it only benefits you, because everything that you're paying in this mortgage in the beginning, it's going to be for your interest. So a lot of that payment is not going to your principal. So your principal is going to be, you know, like staying kind of like in the same level until you start doing these things. And you can do this early on. It doesn't really matter. And then let's see if anybody else has any other questions for me that I can kind of like get out for you guys. And guys, I do want to get into sending or doing another live with my short-term rental people, because I feel like it's a very good booming business right now, and you know, you can gain income from your property, whether you want to live in the property and do it, or whether you want to just use your property as like an investment property. It's very helpful to some. And then also I wanted to mention that your primary home can be from 1 to 4 units. So you can purchase a multi-family property and live in one of them, and then rent out the rest. And this is an income, and you can get your mortgage paid off. So this is something that's very useful, and it's very helpful, and this can be your homestead. Also, after you purchase your property, make sure that you go and apply for your homestead, because that will give you a tax break on your property taxes. This is very important. You have to do this yourself. The county is not going to do it for you. They're not going to, you know, sign you up for it. It's something that you have to do. You have to get in contact with them, and you have to like get this done for yourself, because if not, you're not going to get that tax credit. And it's very important because you do get a discount. And it all depends whether you're married, whether you're single, whether you've been in the military, and you know, there's different credits that you get for your taxes. It's very important, guys. Let's see what else. Let's see. The minimum FHA score. Yes, the minimum FHA score has gone back down. At one point, it did go a little bit up. It's gone back down to 580. So if you have a 580, you can qualify for an FHA loan. But remember, guys, the FHA loan might not be the most favorable for some people, just because of the mortgage insurance, guys. So sometimes it's better to go with conventional. It all depends. Everybody's different. You kind of have to like talk to your mortgage broker about that, and then they will be able to explain it in more into detail. And then always, I recommend that you write down your questions, because sometimes when you get on the phone with people, you'll forget the original questions that you had, and then you don't really get it. But that's kind of like where we're at. So then guys, go ahead, ask me questions, I'm here. Guys, I've enjoyed this live very much. Thank you very much for logging in and listening to me. I appreciate it. I don't like to talk to myself, and at least here I know that I am helping people understand the process. If you have any other questions, I'm gonna go ahead and send over my email so that you guys can, you know, reach me through there. You can also follow my business page. It's Yadi Sells Miami, and then there you can kind of like keep up with what I'm kind of doing, and then also these other lives that I'm going to be doing for you guys. Let's see. Oh, I have a question here. It's definitely a seller's market right now. We are short in inventory and we have a lot more buyers than sellers. But yeah, you can still get a good deal if you stand your ground and you kind of know what you're doing when you're in the process and putting in your offer. You are able to get a good deal. Just because it's a seller's market, it doesn't mean that you're not going to get a good deal. It's just that they have a little bit of a higher advantage, because since there is low inventory, they kind of have like a little of an upper hand. But still, it doesn't really matter. You're still, you know, putting in, you're doing an appraisal, you're doing inspections, and then, you know, you're always going to get the best deal out there if you're working with somebody that's actually like knowledgeable and, you know, knows what they're doing and, you know, can follow the market. For the most part, I would say that, you know, after getting your appraisal, a lot of the contracts that I put in with my clients, I like to do the appraisal contingency, because this means that if the property, you know, does not appraise to the value that you're offering, then the seller and you have a chance to renegotiate this price and put it, you know, down to the appraisal value. So it's something that's very very helpful. I also like to put in the financing contingency, because if there's no loan, there's no purchase. So you always got to try to save your money, because in the beginning, when you first put in an offer, you have to put in an escrow deposit. And this escrow deposit, it's kind of just letting the seller know, hey, look, I'm serious, I'm purchasing your house, and this money is in an escrow to show you that, you know, I am planning to purchase it. This money is, you know, it's on there for this particular person. You have to be careful. You can lose this money. The seller can take it if you default. So you have to make sure that you cross your T's and dot your I's, because you don't want to ever lose your escrow deposit. And then another thing is, this gets credited back to the buyer, so you'll have it in your account for closing. You don't have to, you know, it's not like you're gonna lose it or anything like that. It's just money that you put in escrow just to show, hey, look, I'm serious and it's here. Comparables in the area, yes, definitely. When you first put in an offer, you have to do your research and see what the houses in the area are selling for. An appraiser is going to go up to a 1 mile radius. Did I just? Oh, sorry guys, I thought I lost you. So going back to appraisals and comparables, yes. Comparables are very important. You need to do your comparables before you put in an offer, because since, just like I mentioned before, the bank is never going to give you more or less than what's appraised, than what the property appraises for. So if you are purchasing a home, definitely do your homework. Look at comparables, see what the properties around the area are selling for. The appraiser is going to go up to a 1 mile radius away from the subject property, away from the property that you're putting the contract on. And they're going to compare the house to what's selling in the area. So they're going to make adjustments, either, you know, adjustments, so does it have a pool or not, or the square footage, or how many bedrooms, how many bathrooms, and adjusting this makes them come up with a value for your property. And this is what they go by. And yes, comparables are very important. I 100% recommend that you can also do your research, but yeah, your realtor will help you with that, because we have a fast way of knowing what properties are selling for and what the credits are. Like, let's say if you sell a property, you bought it for, or a property in the corner sold for $620, but then the seller gave them $10,000 credit. That property sold for $610. So it's something that kind of like also goes into play when you are selling properties, because the bank is never going to give you more than what comes out in the appraisal, but you have to make sure that you're giving like a good offer, because you don't want to lose the property, and you don't want to overpay, or for the most part sellers don't want to they don't want to lose any money, so especially when you're selling your home. But yeah, basically that's kind of like what I have. And then the minimum time someone should be at a company before trying to get pre-approved. Okay, so yeah, the bank is going to look at 2 years of employment and taxes. You should be, I think that maybe the best way I can kind of explain this, like if you're self-employed, they want to see that you're self-employed for about 2 years or more. If you are a W-2 employee, they want to see that you are a W-2 employee for about 2 years. You can't go from a W-2 to self-employed and then try to go get pre-approved, because it's not going to work. You have to have 2 years of employment income that they can justify and check, because other than that they will not. They like to see consistency. So I would say that like with the 2 years, as long as it's in the same type of like, let's say W-2 or self-employed, 2 years would be kind of like what they kind of look for, because other than that they're not going to approve your loan. So basically, yeah, that's kind of like what we have going on. And then guys, if you have any other questions, just feel free to get those out here. Okay, so yeah, basically guys, if you kind of like want, I mean, I don't know if you guys have been here for the entire time. Yes, closing costs, they are, yeah, you can usually calculate and count on that it will be an estimate of 2 to 3% of the purchase price, because we cannot give you an accurate number until you're already under contract and you're closer to your closing date, because insurance comes into play, and so does property taxes and other factors that will affect your closing costs. So, but we do kind of prepare people for kind of like an estimate of what it's going to be, and it should be 2 to 3% of your purchase price. But this you will get like when you get closer to your like closing date, and this is something that you have to keep in mind. Even for people that will get 100% financing with the VA loan, they still have to pay their closing costs. And it's funny because a lot of veterans don't even know about their VA loan incentive. It's something that's very beneficial to them. And for being in the armed forces, you get this incentive. It's 100% financing. You don't have to give a down payment, but it's like you still have to pay your closing costs. Yes, you do. It's a percentage based on the price of the house. So you would kind of calculate like the 2 to 3% of like your sales price, the price that you're paying for the property. Let's see what else I got here. Okay, so for the deposit, you mean for the escrow deposit? The escrow deposit, like I said, this goes to you. This is not, this is just like securing your property and letting your sellers know, hey, look, I'm very interested. This is how interested I am. I've got this. Also, Another way to show, this is why I also kind of encourage people to get pre-approved before they start looking, is because if you go out and you fall in love with a property and you want to place an offer, this offer has to go with your pre-approval. If you do not send a pre-approval or a proof of funds, nobody's going to look at your offer. They're gonna go with the one that's been pre-approved, that's already been through the process, and that's already like, that's they kind of see it more of like a person is more serious when I do something like this. Yes, closing costs is very important with the VA loan. Closing costs are always going to be there. You can kind of, like with the VA loan, I don't know if I have any like veterans here for sure. Willie, I know that you're a veteran, and with the closing costs for VA loans and veterans, some people offer incentives for closing to help out with the VA loan. Just because of being a service member, they kind of like to give back and help out, and sometimes some of these sellers like to give out a credit for closing, or things like that. Also, me myself, I've been in a situation where I've also offered some incentive for closing to my buyers, because I feel like if it's something that I can clearly do, I will do something like that for them and help them out. It's as an incentive and kind of like a thank you for working with me and trusting me with your home buying process, because I know that it gets a little hard and there's a lot of us out there. But for me, I very much enjoy it, and I like to do a very good job. To me, I've worked with family, with friends, with strangers, and I give everybody the same exact service. Like I try my hardest with everything, and I try to get the best outcome of every situation, and getting you guys your home is very important to me. So I'm kind of like very, very passionate about that. And then let's see if I have any more questions. Okay, to prepare, yes, you should be, like I said, always try to get a couple of different maybe scenarios, or if you want to try to get pre-approved, you can shop around. Shopping around is very important. You have to make sure that they're not pulling your credit like a hard pull. If you want to start off by maybe getting your credit report on your own, that's amazing as well. Some mortgage brokers and banks will accept your credit report. It has to be recent. It can't be 6 months old or anything like that, but if it's less than 30 days, I think they can work with that, at least to give you a pre-approval. And then you can kind of get maybe rates and stuff like that. But it's very, very, very important. The first thing that I would say is like save your money, so that you know that you have this money saved aside for your closing costs. Get your pre-approval. Shop around for a different banks and with mortgage brokers. And then your insurance, very important as well. You can shop around for that as well. Insurance rates have kind of gone up just because of all the I imagine like Florida here, it's like there's storms and hurricanes, and things are gonna happen. And plus, a lot of the homes here in Florida are already older homes that kind of might need repairs on the roof. A roof's life expectancy can be up to 30 years. So once you start hitting that mark, it gets a little more expensive to insure the home. So it's something very, very important for you guys to know. And like I said, you don't have to go with the insurance company that is provided by the bank or your mortgage broker. You can shop around for that, and you can definitely get different quotes so that you can go with the best rate for you and the best coverage. It all depends on what it is exactly that you're looking for as far as coverage and how much you can afford to pay. Because remember that this is going to be something that you're going to be paying for 30 years, about 30 years. So it might get a little expensive. But yes, for the most part, I would say that it's a good investment. And you're also free to rent out your property if you want to move, or you don't want to sell it, you want to hold it. Or if you want to maybe purchase a multifamily, you can go from 1 to 4 units and you can live in one of them. and this is going to be something that's beneficial to you because you're going to be getting income. So it's a good thing to kind of think about something like that, because you can qualify for a first time home buyer loan and FHA conventional with up to four units. And some people find this to be very, very attractive when it comes down time to purchase their home. So I'm gonna go back into my little notes here and make sure I touched all the points. Guys, if you have any other questions, just feel free to go ahead and send them over. I am very much loving this live and giving you guys all this free information that I have for you. And just feel free to reach out to me if you guys have any more questions after this. I'm gonna be probably putting this video out in my YouTube channel so that you all can have access to it whenever you'd like. And I look forward to answering any questions that you guys might have, or if you guys want to go ahead and reach out to me for any other question, that's also very much welcome. I love answering questions. And then but yeah, for the most part, the market is doing very good right now. I'm getting a lot of people moving here from different states, and a lot of people coming here for work. And it's for the most part, it's very, very very stable right now, and it's very good. We have a lot of buyers out there that are actually in the market and looking. And then my email is Yadi Molina Realtor @gmail.com. And then let me see, I think I can kind of like put it here. Oh, I can. Guys, bear with me. This is like my first live, and I don't really know what I'm doing, but I'm hanging in there. Okay. All right, Yadi Molina Realtor at gmail.com. Yadi Molina Realtor at gmail.com. Okay, post. Guys, that's my email. Go ahead and save it. And if you guys have any questions, just please feel free to reach out. I love answering questions, and I love helping people in any way that I can, any way, shape, or form. And then, I have a question. Okay. Yes, to qualify for a loan, the minimum credit score for an FHA loan would be 580. But with the FHA loan, you have to remember that you are required to have mortgage insurance, and you also have to pay a premium upfront. So upfront, you're going to pay a premium of 1.75. Let me just go back and confirm that quickly, because I have it here in my notes. And yes, I just want to make sure. Yes, it's a premium of 1.75. And then for the life of that loan, you are going to have a mortgage insurance that's added to your mortgage payment. So with an FHA loan, that's what happens with that. So, that's kind of something to consider when you're in the market looking for, different types of options for you. This is something that you should know, and you should discuss with your mortgage broker or your bank if you do decide to go with an FHA loan, because this should be something very clear, and it's something that is a must with an FHA loan. The conventional loan does not require an upfront premium or the mortgage insurance. So it's sometimes it's a little bit more favorable to some people. It just all depends on like what your debt is and what your credit is at. These factors, they kind of decide, like whether you can do an FHA or a conventional. So guys, I am getting ready to log off. And thank you very much, guys, for joining my live. I am very, very, very happy that you guys are here. And I'm hoping that I might have been able to guide you guys into the right direction at least. And if you've already been through the home buying process, I'm hoping that you've learned something from me. And if not, then you know, maybe you can log into one of my other lives for any of my other classes that I'm going to be doing. So thank you guys so much. Have an amazing rest of your weekend. I look forward to seeing you guys back on my next live, and feel free to jot down my email and go ahead and send me any other questions that you guys might have. Don't be shy, guys. Send me anything. I will answer your questions if I have the answer. If I don't have it, I will find it. That's just the way that I am. But thank you very much, and I'm hoping to see you guys soon.